Okay, let's just get right into it, guys. Evening, everyone. Today we're just going to be doing the Indices Advanced Training session. Okay, recorded as normal. This is the second module. We're just going to be going into brief introduction into the way we're going to be looking at indices from now on. Okay, so I'd like to welcome everyone. Okay, now first part, very important. What is an index? All right. Also, different people's understandings from indices of what an index is. I've heard a lot of very interesting answers and things of the sort. But an index or indices are a collection of the best stocks listed in a particular exchange or market or sector, so to speak. So you'd say, for instance, if this would be a sector or market, there was a bit of a typo. Now, these are the top performing markets and make up the driving force behind, well, the economy of that particular country or that industry. They would be that because they represent the top companies or the top stocks in terms of valuations. So, for instance, you'd have companies that represent in the US tech world some of the best technology companies in the States. Right. So the ones that are performing, it's not a matter of just ideas and stuff like that. We're talking like real stock value. So the highest ones actually make it on there as well. So it basically is a matter of trying to pick an industry, okay, or a sector or that particular market and then just trading off of that, because now instead of you trading each and every stock individually and trying to figure out what this company is going to be doing or what that company is going to be doing, it's all done for you. The research is done for you, and then you just get the top one. So when the economy actually is suffering, or the currency itself is suffering generally, the index will also follow, and vice versa. Okay, so they are correlated, because if the major companies, because even in deflationary stages, right, where the economy is bad and things aren't going so great, the best companies also always make profits. That's all. And in most cases, the best profit or the best companies find a way to actually increase their profit in times of depression or just normal recessionary stages. So it is, yeah, I can say recession rather. So that's the basics of what an index is. All right, so indices are simple to trade, but do require a good level of practice before engaging with them. Okay? Just like anything within trading, you have to do your due diligence. You need to do your back testing, data gathering, all of that before you place your single live trade on the market. Okay. Now, pros of trading indices. All right. Now, trading CFD contracts indices, the general direction of most common sector or market stocks is actually up, right? So if you're looking at like I was saying, when the economy is generally doing good, um, especially if you're looking at the more developed nations, the indices will be on an upward trending market. That's why they're a great investment, and that's why they are used sort of like as a gauge for money managers. So there's particular stats that I think 90% of money managers won't beat the S&P 500, or they won't beat the Dow Jones Industrial Average. So it's literally used as some sort of a, I don't know, benchmark, because in a general sense, stocks will go up, right? And the stocks that do go bankrupt, or the companies that do go bankrupt, they are taken off that list, right? So it's always the best or the finest in terms of certain criteria right at the top. So You're looking at one directional bias because, as a general rule, you're expecting the market to rise. Obviously, you don't just rise up to heaven in one go, but you are going to get a bit of pullbacks to the downside as well. All right, so all you're looking for are those opportunities. Now, it's easy to read the technicals because we try not to involve much, especially when we're doing this, because in effect, you're halving your risk just by deciding to take one directional bias from the market. Okay, so if you say you're only going to be looking at buy opportunities, then immediately that says you will never take a losing trade to the downside. So if you'll never take a short losing trade ever in your life, so that basically halves the amount of trade that you might give up. So always looking at opportunities to go long. Now, tend to trend much more effectively than currencies due to the lower participation. Okay, we know what point, what trillion USD, okay, per day that's traded on the forex market, and there's a lot of competition and a lot of volatility within that particular market. All right, so hence a lot of manipulation as well. So you do find those stock runs to be a bit more aggressive on the foreign exchange market because there's a lot more participants in there and a whole lot more liquidity, and every retail trader gets thrown into the deep end, which is the foreign exchange market, as soon as they come on, which obviously is a bit tough for most people. Okay, there's no need for you to actually study a million company stocks. You just pick an index and you just go with that particular index on a day-to-day basis, right? So those would be, I think there's about 5 pros for trading indices. Now you do have cons. One of the major ones, well, for me, the only real con would be it needs a bit of capital to trade. Right? So if you have an account that you want to trade off indices, especially with some of the overseas brokers, because I've only seen one local broker that enables you to actually trade a micro account on an index. Okay, I think that was like 2 months ago or so, where I actually saw a local broker actually offer that. Right, so that's always great, but in a general rule, you can only buy one contract of an index. There is the menu side of things, which is more or less the same. So it's a smaller portion of the larger one. Because if you're looking at buying one contract of the German DAX, I mean, for me to be able to buy at least a contract of the German DAX, you might need $10,000 account if you're going to be using a stop loss for you to have a comfortable stop loss. So you might need $10,000 to be able to buy at least one contract of the German DAX. Okay. And they can range for periods of time, so extended periods of time. So you might find the market just ranging for a week or 2 or 3, but in a general sense, they do rejoin the trend because it's with any market. Once there's enough volume that was created for the market to literally pick a direction, they will in fact go in that direction. Right. Okay, so everyone's good. Okay. Right now, here is a list of tradable indices. Okay. So the index CFTs will be trading. We will be trading specifically the UK 100. So that is the FTSE. That is the top 100 listed companies in the UK, United Kingdom. So on some platforms, broker platforms, it might be FTSE. Right. And then secondly, you have the German DAX, which is the top 30 listed companies in Germany. Okay. Sometimes it's called the German DAX or just the DAX. So I do believe some other symbols. This is GER 30, which stands for German 30. It might be GDAX, or some platforms might call it what's it called again? I'll throw the name down in the group as well. Don't worry about that. But in the general sense, it's going to be DAX or GER30 or NDEX. No, that's not it. But don't worry, guys. I'll figure it out and just send it through to the group so you guys can know. But with the platforms that we're going to be using, the brokers that we're going to be using, it is GDEX, right? And if it's a mini, it's going to have a small m right at the end there. So I'll show you guys on the platform later. Okay, then you have the J225, okay, which is the top 225 listed companies in Japan, and the Dow Jones, okay, the Dow Jones Industrial Average, right? So the top 30 industrial companies within the street or within the US, S&P, right, Standards and Poor 500, top 500 companies, and NGX. Now this is the Nasdaq, which is the US Tech 100, so the top 100 tech companies within the street or US. Okay, now they are generally up in direction, therefore we seek out longs with our approach. Okay, now this is a weekly of the German DAX, okay, the GER30, and if you were to look at the monthly, okay, so if you go back into your charts and you just try to look at the monthly, you will see that in general you are looking at upward trending markets. Okay, that's good. Okay, all right, so okay, all right, perfect. Okay, so if you look at the monthly, you're probably looking at, I think if I'm correct, from around 2012. That's where the initial upward trending move has been. It's just been breaking highs. I was anticipating a stall out of around 13,000, but they actually just blew right through it. So I was expecting a bit of a pullback at 13,000 on the German DAX, but it just went through. Got right. Right. Okay, now the actual trade setup that we're going to be looking for. Now we're looking for entries on the 1 hour time frame. Sometimes you can find these entries also on the 30 minutes, but you're just going to be looking at the 1 hour time frame. Now you do your normal analysis on the daily as well as the weekly. So you're just looking for major support and resistance levels. You don't want to be buying into a resistance level. You don't want to be shorting into a support level. So you're looking for entries on the 1 hour time frame. Now, what you are going to be waiting for are pullback for opportunities to actually go long, right? So you're not going to just sit there and say, okay, I'm just going to buy it anytime. You need to wait for some sort of a retracement to come in within the right space or within the right time, and then you can go long, right? Create a short triggering by tapping the LOD or previous day's low, right? So today's low or the low of the week or the previous day's low, those make for a better trade setup, okay? Because what that means is algos are activated going long and people's pending orders looking for breakouts going short are activated as well. So when it ends off on a nice pin bar right on the 200 or the 800 EMA, we've got a solid position or a solid setup rather. Right, now by creating volume by tapping the 200 EM or 800 EMAs, right, the moving averages are used as a sort of support and resistance as well, especially when it comes to automated trading as well. So when 200 EMA is violated to the downside, people will go short, right, because they see that as a support there, right? Or if it's broken to the upside, then people will be looking for long opportunities. So that's a simple breakout strategy that sometimes does work, but in most cases the trend will not work because of the whipsaw involved. Okay, everyone's good. Okay, now if we were to take a closer look at the setup itself, okay, I know this is only 15 minutes, guys, and we're looking for trade setups on the H1. Just didn't have my other platform on to actually take screenshots rather of ones that have formed in the H1. Okay, but as we can see, this is on UK 100. All right, so this would be an ordinary trade setup. Right, so this, I think this is a buy limit. Yeah, this was a buy limit. It would sit probably below, you can see over here. This is just below the previous day's low, and also we're expecting the market to tap at this 800 EMA, right? So we definitely be looking at buying this. Also a round number as well. Okay, I'm sure everyone has a good idea of what the round number is, which is 75.20. So you'd be expecting a lot of shorting around those areas as well, which then would probably lead to an upward trend move. So this is how it would look like on a under normal circumstances. Okay, hope everyone's still good. Everyone's still okay. Okay, all right, perfect then. All right, now when you see the actual trade setup develop, right? So let's say you looked at the 1 hour, or you were looking at the 30-minute time frame. You market opened, right? Broke lower, tapped the previous day's low, and also tapped 800 or the 200 EMA, right? And pulling back up to close above it. Now you would take 2 trades going long, each at minimum risk, obviously, would double the lot size double the stop loss size as you take profit. So you drag 50 pips stop, okay, 50 pips stop, and then your take profit is going to be double that, which is going to be 100 pips. Now the second trade, you do not have a take profit on it right now. I'll tell you why. The first trade, you can have 100 point take profit level, or that average daily